Welcome back, everybody, to another YouTube trade breakdown and another video of me showing you that I do not own a t-shirt. So, today's trade breakdown was on the NASDAQ for shorts. I took it on NQ, which is on the left. We have S&P 500 in the middle. We have the Dow Jones on the right. We're going to do what we usually do, start off from our higher time frame perspectives, then go to the intermediate, then go to the lower time frame for execution. And in this video, it's just going to be a completely raw cut. I'm going to give you guys a complete walkthrough of where my head was at going into the day and show you the live call out, all that sort of stuff, because this was taken in my live stream in the Discord happening during the New York session. All right, so to start off, compare the three indices, NASDAQ, S&P, YM. Now, what is the difference that you guys see here between these three? The difference that you guys should have seen here is that there was an SMT set in at these weekly highs between the three assets, showing you that the Dow Jones actually is the weaker pair in this scenario. So with this SMT set in place, I am going to drop down to the 4-hour chart and see what is going on at this weekly SMT high and what can we frame on our intermediate term perspective for a trade. Now, going into the closure of Tuesday's trading day, this is literally how we closed. And when we did this, I immediately did my analysis before going into the 6 o'clock open for the next day. And this is what I drew out and I sent to my Discord going into like what my eyes were drawn to going into the next day. Because I want to trade a plan that I've already created the night before. I want to like have a level headspace going into the day. So what I saw on this time frame, and if you guys are familiar with my Forever model, you would know that right now we're looking to pretty much set up a B-rated Forever model setup because we ran an external high. We had a short-term high that was violated right here by what exactly? We had a short-term high violated by this up-close candle right here. And we closed below it just like that. So that was a 4-hour bearish order block. And the same thing set in on the S&P 500. We ran this short-term high resting here. We closed below that short-term high, and we tagged it here, giving us a run lower, as you can see, just like that. A smooth and simple model with also weekly untapped fair value gaps resting below us, and me having my eyes drawn to this low and this corresponding low on the S&P 500. So going into the day, this is exactly what I saw on Tuesday's close. Now, let's fast forward to what we had coming up into that New York session to try and catch that intraday move. So, as you can see right here, this is the 6 a.m. candle that is during the New York session. Now, what we're looking to do within this 6 a.m. candle is to get a read as to what is price doing next. How is this New York session going to pan out for us? Now, if I compare the NASDAQ, the S&P 500, and the Dow Jones, is there anything that I could see right now that's like a cracking correlation? I don't see anything right now at the lows, but do I see anything right now at the highs? I do on this exact candle's wick. Where do I see it? Let me check and see any discorrelation between the NASDAQ and the S&P 500. Nothing right there, but I see it on the Dow. Where? Right here at this resting high with this candle body also still respecting this bearish fair value gap resting right here. So we have an SMT set in for a second stage between the NASDAQ and the Dow Jones, just like that. We have a first SMT on the weekly. Now we have a second SMT set in on that 4-hour chart within that 4-hour bearish fair value gap that we have on the S&P 500, the NASDAQ, and the Dow Jones. So with that coming into place, this kind of gave me my bias and my sentiment going into that New York session to try and frame a 15-minute market maker sell model down to the lows, or to at least at a minimum the London lows. So let's look and see what is happening on this wick and how we could actually execute from this 4-hour SMT set into place for us. So looking at the 15-minute chart, I replayed price at 8:30. What happened at 8:30? We had a high impact news driver that I wanted to see what would happen from this point on. Is news going to give us a manipulation lower, or is it going to give us a manipulation higher? So like let's say, for instance, if I replay price one more bar, just like this, let's say news came in and news gave us a down close candle, like aggressive down close candle, just like this. And it ran all those resting lows right here. But at the same time, it failed to do the same sort of thing and run the lows on like the S&P 500. I would have anticipated this to be the SMT for the day, like that, and then I would have anticipated 930 to expand higher, especially if we had a closure above the down close candle just like this, like that. If we had a closure after the news release above the down close candle that created the SMT and also ran liquidity, I would believe that the 930 would expand higher rather than us continuing lower. So that was kind of my indication of like my plan for that given day. I would have needed the 830 to come lower for then me to anticipate 930 equities open to then go higher. Pretty much, if you guys are kind of getting my gist of where I'm gutting out. And I've also explained this in my last 2 YouTube videos on utilizing time and putting everything together, especially with the economic calendar and how to use it to your advantage. But this 15-minute candle on the news release, we went higher. We created an SMT with the Dow Jones, as you can see here, but I don't have any sort of entry function. I need to wait. So what I'm using for my next key time here is 930. And as you can see, at 930, what do? Boom. Massive displacement lower, violating a 15-minute bearish fair value gap, while at the same time for the Dow Jones violating that 15-minute bearish fair value gap. But the Dow Jones is the strength leader in this scenario, while the NASDAQ is the weaker pair here. And at the same time, on this 15-minute candle, what did we do? We have a short-term high resting right here. That does what? This short-term high clears a resting liquidity pool. We clear a short-term high resting here, and then we close below this down close candle that ran that short-term high. So this is my bearish order block that I could then utilize for a short execution. And then all I need to do is look for a liquidity pool to target that is roughly sitting at a 1 to 2 risk to reward, which is beautifully sitting for London lows that has no corresponding SMT between the 3 assets, as you guys can see here. If there was an SMT set in at London, I would not be looking to frame short positions here. So at this point, what I did is I called to my Discord and I said that I wanted to short at the retag of this 15-minute bearish order block. I wanted to target a London low like this with a risk to reward of 1 to 2, which is just like that, basically covering the high of that up close candle that ran that short-term high. And as you can see, it's a 50-point stop loss for a reward of 100 points. Now, let me skip to the next 15-minute candle that actually tags me in here. But a lot of you guys in this situation, when we are here, you would have immediately like, all right, we ran all these lows now, all this sort of stuff. Like we tagged this untapped 15-minute body low. I'm going to go jam my stop, go break even here. But that's where you're wrong. There still could be a possibility for price to retrace back into our POI. We have our labeled protected high all the way up here. We know if price takes this out, we'll probably be trading higher for the day. Why would you not let your trade breathe? Or if you've already taken the risk and you've accepted this as a loss, don't adjust your stop loss. It's either a win or a loss, no in between. And I know a lot of you guys are also like, you're trading these evaluation accounts as if it's your own personal capital. Like these evaluation accounts are not expensive. Like even like Apex, they're running an 80% off sale. Code Sniper, by the way, 80% off sale that they cost like $50 to $80. And you're sweating or dripping sweat on your trades, freaking out, closing trades early, or like not going to your full TP or closing them at break even. Like, why are you doing that? You did your analysis. Now let the market do what it needs to do. If it needs to come back to your entry, make some sort of SMT en route to it, and then go to your take profit, which is exactly what happened today. Let it happen. because if you guys could see here, we created a 15-minute bearish order block on the S&P 500 resting here, and price came back up on that next 15-minute candle, retapped it there. We created a 15-minute bearish fair value gap on both of the pairs, and on top of that, the Dow Jones. Let's play out price a little bit more, and you guys can see we had some traffic after we came down to that rejection block. We traded higher. We are basically creating like SMT en route, and it got a little dicey. We came back up, retagged the entry point just like that, and then we had a wild 15-minute candle here. This was a nutty like up and then down and then back up, and then 15-minute candle comes in again. We trade higher again. We create some more SMT on the 15-minute, as you can see with the Dow failing to take out the 15-minute candle high, and then boom, just like that. At this time, you could see this last piece of SMT actually saved the position, just like that, with a sharp, quick move down, resting at the lows. Now, that is a classic set and forget position. You accept the risk and you walk away. That is it. We did our analysis. We did everything that we could in regards to the market. It was a pretty slow and chopped delivery. Would I have wanted it to be faster and me to be out within the first two 15-minute candles? That would have been great. But it's not always sunshine and rainbows here. We are doing everything that we can. We know our edge, and we are executing properly. It is in the market's job now to either deliver us to our targets or not. It's simple as that. And as you can see, we swept out all of the liquidity that we were targeting prior the London lows. That had zero SMT between the three assets. So this was not labeled as a low of the day or protected low because there was no SMT. We took it all out, and then you guys saw how the rest of the day panned out. We also got a tap of that weekly bullish fair value gap on the S&P 500, just like that, because those were the targets for the week. And the reaction off of that, this is where the real longs could actually set into play and look to potentially take a trade tomorrow, if not Friday, for higher prices targeting the daily highs or previous daily high. But you guys get the gist as to where I'm going at with this whole thing. You have to make sure that you're doing the proper analysis whenever you're getting into these trades. Leave it at a set risk or reward. Don't jam your stops too early because you see you ran a low. It makes no sense because price could always retrace back, especially if you leave a fair value gap like this. Like, if you guys went break even after seeing this, like literally immediate drop here, and you went break even, you're just like, there's something wrong with you, or you're learning from the wrong person. I promise you that. Because what does price do? Price takes out old highs and lows and rebalances imbalances. We took out old lows. Now what do we have to do next? We have to rebalance and imbalance just like this. After we rebalance and imbalance, what do? We take out another old low, which is exactly what we did here. Rebalance, imbalance, take out a low. You cannot be looking at this as a break even that fast. You need to let the trade breathe. You need to let it do its thing. Otherwise, you are going to be getting pissed off and punching holes through your computer screen. But I hope you guys learned something from this YouTube trade breakdown. I have a big monster project that I'm going to be releasing at a further date. It is a super long video, A to Z, of everything that you could possibly ever need in trading. Like literally the last video that I could ever release on my channel, and you'd be good for the rest of your life. But that'll be announced later on. Anyways, good luck, good trading for the rest of the week, guys. I hope you guys make bank. But if you have any questions, please drop it in the comments below. Like, comment, subscribe. We're so close to 40K subscribers. I'm really excited. We'll do a massive giveaway then. But take care, everybody. And I will talk to you guys and see you all for the next upload. Deuces.